Google is the one exception. It's the only Mag 7 stock I would recommend right now. I mean, obviously, you want to have them in your portfolio long term, but not as trading vehicles. But Google looks great. Had a great day today when the rest of the market wasn't so good. Um, yeah. So back on the show a year ago, I mentioned a few stocks. I just wanted to kind of repeat those because some of them are still actionable. There was a company called MCore. EME is the ticker symbol. They are an architectural firm with respect to data centers. So there are only a handful of companies that do this, three big ones. They're one of the three. And they design, they build, and then they lease out data centers. And they're doing this as a repeated model, and they're very good at it. They were trading at around 440 when I mentioned them a year ago. They shot up to 776. They're now back down into the low 600s. And to me, that's a level that is a good buy. So that one is still in play. The other one is still in play is Howmet, HWM, regular. Uh, you'll find it regularly in the IBD top 50, sometimes the IBD top 10. It is a defense play. They have a patent on a metal, a sheet of metal that is lighter than aluminum and stronger than steel. So it's just nothing like it in the world. 90% of our new fighter jets are incorporating this metal into their structures, and they're now beginning to sell this product overseas. They've got a big future ahead of them, and of course, with defense contracting being ramped up here in the United States, that's a good place to be. I recommended gold, and I suggested using the 2X ETF fund for gold, UGL, and it went from 25 to 62, and it's still up there near all-time highs, and I would think it's a hold. I'm in gold, I'm in silver, I'm in gold miners, I'm in silver miners, and I'm not letting those guys go anytime real soon. Among the miners, I recommended AEM, which was on the IBD leaderboard not too long ago. It might still be there. And it's probably the best in the group. There's Gold Fields GFI. There's Hecla, which is a silver mining company. And we're in a couple of those ourselves. And then lastly was Micron. I mentioned it a year ago. It was around 100, and then it dropped 40%. So I said to my people in my live trading room, I said, I'm not looking very good from that recommendation back at 100. Of course, it was dropping on the tariff crash.
Right.
Well, then it went from 60.
A lot of things dropped that much.
A lot of things dropped back then, exactly.
Yeah.
It went from 60 to 300 something. So it has redeemed itself. Mm-hmm. Micron is the memory storage play. There are several others, and I do think one is actually best poised for future upside. I'll talk about that in just a minute, but Micron is certainly a hold. It's the best of breed in that space.
I want to kind of jump back a little bit because you mentioned a lot of gold stocks, and I feel like it's very rare. Every year we have a best companies of 2025. Ken Shreve did a great article on this. It's on investors.com. You can find it, on there. And I was stunned by how many gold stocks were on that list. And even our IBD 50 flagship product, or list, I should say, it's lately been almost like a gold ETF, a gold miner ETF, because of how much exposure the list and look, this is a computer generated list. It just kind of goes where strength is, and again, the gold miners have just been really, really high up on that list. So for such a strong market, when you're talking AI, how unusual is it for gold to be taking so many of these top spots?
Yeah, and that raises all kinds of really good questions. Let me back up a little bit. So if we look ahead, and I'll answer your question, but let me just give a little bit of context to this. Mm-hmm. If we look ahead to 2026, if we wanted to draw out a map of where we see the market going, it's not going to be dissimilar to 2025. I do think, however, there will be a few more challenges along the way. So one of them is this CapEx spending. $350 billion was spent last year by the major blue chip tech stocks. That's a couple of child care learning centers in Minnesota in terms of the budget, but it's actually 75%, 75% of all CapEx spent in 2025 was spent on new AI infrastructure mostly. Now, for 2026, they're projected to go up to 500 billion, maybe even 600 billion. Now, there's good news and bad news with that. The good news is economists who are much smarter than I am have told us that that sort of increase in spending should yield about a 30% increase in earnings per share for these data center companies. These companies are the giga clouds and the hyperscalers and the ones who are supplying the chips and all of that. That's really good news because that will bring valuations down to a little bit more reasonable level. They're pretty elevated right now and will expand margins greatly. And that's the big concern. So if that plays out, I think we're going to see a really good year for tech. I have my concerns about it playing out, however, because it didn't exactly play out last year. I'm not sure what has changed to allow it to play out this year, but that's the hope. More spending on CapEx, more profits coming in, bigger earnings per share.
Mhm.
Um,
Well, and just real quickly,
yeah.
before you move on, I guess the pushback I would say is how much of that is already kind of priced in. A lot of
Mm.
people have that expectation. And so, of course, the market is more forward looking. So it's not necessarily what the earnings have been, but what they're expected to be. And, you know, there's so many people that say, well, gosh, we had such a strong year of 2025. How much of that was kind of projecting out how the CapEx spend? And I mean, we certainly got that news on occasion where you had companies saying, oh, yeah, we're going to be spending a lot. Those companies got hit sometimes, like Meta, but
Mhm.
the beneficiaries were, oh, where is that CapEx spend going? So I guess, again, how much of that is baked in already?
Well, no, that's a great question. And, the market's a forward discounting mechanism. So it's always out 2 to 3 months ahead. Uh, that 600, $500 billion has not yet been spent. So we're just anticipating that that's going to happen. And I think that's part of the reason why you're starting to see a Google. Amazon is starting to look a little bit better. Microsoft is still under some pressure, but it's off its lows. So I think you're starting to see a little bit of some hope baking back in.